So we're going to start drilling pumping wells during May. We're going to start the PFS by middle of this year.
Welcome back to Rockstock Channel. It is Monday, May 11th, and Matt and I are back with Gabriel Rubacha, CEO of NOA Lithium Brines, following a deep dive research note that Matt recently published on NOA, which we'll get into in a few moments. I've known Gabriel for more than 8 years since he was on the board of Lithium Americas and held an operating role as CEO of the Minera XR JV with Ganfeng. Minera XR, 45% owned by Lithium Argentina, is now at nameplate 40,000 tons production at the Cauchari-Olaroz salar in Argentina and is producing carbonate at one of the lowest costs in the industry. RK Equity was a strategic advisor to and an investor in Lithium Americas from its early days, and is similarly an advisor to and an investor in NOA Lithium Brines. But we are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. If you'd like a copy of Matt's research note, please visit our website at rkequity.com under the Platforms tab. Before we begin, we'd also like to thank all of those who have signed up as Patreon sponsors since we relaunched this initiative last month. While we put a lot of information in the public domain for free, we are now offering proprietary content to our many followers, viewers, and listeners. Please visit patreon.com/rockstockchannel to see what's on offer at our bronze, silver, and gold tiers. We have included in the show notes links to our introductory quarterly battery materials review and our quarterly investor webinar to give you a taste of what you'll get as a Patreon sponsor. We'd also like to thank a new sponsor for this channel, Clean Elements, an investor group focused on providing growth capital for critical minerals developers focused on the energy transition. Clean Elements has invested over $30 million to date and is currently the largest shareholder of both NOA Lithium Brines and Galan Lithium, which is also developing a high-grade lithium project in Argentina. We have flagged repeatedly on this channel and through Matt's blogs and my Lithium-ion Bull newsletter that we see a surprising undervaluation of conventional brine plays in Argentina to more richly valued peers in other geographies or lithium types. NOAA's stock jumped 30% on Friday, but at just 33 cents, it still has quite a bit of catch-up to its all-time high in 2023 of 65 cents. And as Matt argues in his research entitled Market Fails to Understand NOAA's Optionality, recent M&A multiples for brine assets in Argentina could warrant a valuation north of $2.50 for NOAA. And with that, I'll leave it with Matt to dig in with Gabriel on his plans from here to help make that a reality.
Thanks very much, Howard. Good afternoon, Gabriel. How are you?
I'm doing well. Thanks.
Excellent. Okay, great. Well, let's just dive into the note in some detail then. I think the first thing I want to talk about is regards to the in situ grade of the project. At 576 milligrams per liter, that is a lot more than the DLE projects are in Argentina, but also a little bit less than some of the higher grade conventional projects are. So can we talk a little bit about your plans for bringing it into development within the PEA that we've used as the bedrock for the model? We are focused on a fully conventional project, but obviously there is the potential to go partially DLE, so effectively a hybrid DLE. Can you talk a little bit about what similar projects are doing in the area with hybrid DLE and why that might be a good solution for the project?
Yeah, absolutely. One of the things that we wanted to evaluate is the different options that we got for the project. As you said, the PEA was developed based on evaporation. That is a commercially proven process. And we believe that it was the right path for the project, considering that we got a high concentration. So we believe that that was the right approach for the first step uh, for the economic evaluation of the project. We just engaged Hatch. We announced that last week that we engaged Hatch for a process that will take between 2 and 3 months, where we're going to evaluate a few DLE technologies that are already well proven. Hatch got a lot of experience in that field, so we're gonna test our brine with a number of those technologies and get more uh, uh, data related specifically to our brines. There are a few examples of things that have been done during the last, I would say, 2 years. One of that is Ganfeng Lithium Argentina, Pastos Grandes, and the same with the expansion of Mini XR. Both of them are evaluating a hybrid approach of ponds plus DLE. In that way, you can take the advantage of the DLE, reducing the size of the ponds as well, so reducing the risk of unproven yet commercially unproven technologies and a high recovery of the the advantages of the DLE. So we wanted to explore those options in our project.
Okay, and if you're lowering the footprint of the ponds, that's a reduction in capex and also any reduction in opex off the back of that.
We believe that potentially we can have a reduction of OPEX, but the most important thing is that we're going to be dealing with a significant reduction of reagents that from the logistical point of view, it's complex. So even if we are in the same range in terms of OPEX, it's going to be an advantage if we can reduce the use of reagents. That is significant in the current scenario. So this is something that is going to be a significant advantage with the use of DLE. The reduction of capex also it's important, but also the construction of ponds is complex. You need to start early on the process of filling the ponds. So it's complex. It's a proven technology, but it's complex. So we believe that if we are able to get something that is a technology that provides us more confidence in one technology that provides enough confidence going forward with this, it's going to be very advantageous for the development of the project.
Okay, so the base case is conventional solar evaporation, and that's very viable given the other projects in that area. It's been proven at that concentration to work. But if you wanted to slightly improve the project, potentially you could include a DLE element.
Yeah, absolutely.
Okay. Let's talk about some of the other optionality then, which for me, I don't think that the market is really picking up on. So number one is the potential to go hybrid. Number two is the potential to resite the carbonate plant at a lower altitude. And can you talk to me a little bit about what that would mean in terms of the project and particularly around the sort of cost side of things?
Right now, all the construction cost is evaluated at site. So with all the unproductive hours associated with working at high elevation and in a remote location, cost of logistical work associated with that. So if we are able to relocate part of the plant at the lower elevation, that is going to be a significant, not significant, a reduction of cost in the capex, but also, again, from the logistical point of view, it's going to be very advantageous for the development of the project. That could be probably having a chloride outside and then carbonate plant at the lower elevation. That is a logic that we are thinking. That is part of the evaluation that we are going to be doing during the pre-feasibility. We are currently working to find a location at the lower elevation. So we are working on that to see if that is if feasible as well. That should be also evaluated in light of this DLE evaluation, because one thing is having with the evaporation, another with the DLE, but it's part of the whole evaluation. But having a plant at the lower elevation, it's significant. The savings in terms of man hours at site. I've been during the construction of Minera XR, and the having people outside at high elevation, it's always problematic.
Okay. And I mean, you wouldn't be the first project to have the downstream plants at a lower level, would you? So Ganfeng, POSCO, and Livent, they've all operate their plants at or their carbonate plants at a lower elevation.
No, as a matter of fact, the first plant that was ever built in Argentina was defined in this way. What used to be FMC, I've been involved in that, and it was done in this way as well.
Okay. Then obviously the next question is around what product you produce. And I think this one is a really interesting one. So prevailing products in the industry is that brine goes to produce lithium carbonate. But of course, there's an intermediate step in there where you upgrade the lithium chloride to carbonate. And sort of increasingly, as we move towards solid state and other formulations of cells, lithium chloride is an important raw material. So we are starting to see a number of producers look at leaving out the carbonation step and just producing lithium chloride. So can you talk a little bit about what the impact would be on the project economics of just going the chloride step? What's the impact on the payability of the product? What's the impact on the cost base? Obviously, the capital cost is going to fall significantly because you don't have to put a carbonate plant on. But could you just talk the viewers through what that means for the project?
I believe that if we go that route, the main the main advantage, I would say, that is it will significantly de-risk the development of the project, because part of the risk or the from chloride to carbonate is a significant risk associated with taking the product from chloride to carbonate. So if we are able to, if the market is there, as you well said, if the market is there and we are able to produce just a chloride, we get rid of a significant risk portion of the project. Obviously, the price is going to be less, but it's not significantly less than the carbonate, but the capex is reduced significantly, probably the 60% of the capex of the what we got right now. So it's significant, but the risk of not building the carbonate portion of the plant is reduce significantly. So I think that is very important.
Okay. And obviously, it's early days. Among the producers I know that are just going to chloride in Argentina, one is going the anhydrous route, and one is going the hydrated route. Any thoughts about the sort of different economics, logistical aspects of that?
I believe that long term it should be anhydrated because at the end of the day, not only because of cost, because shipping water at the end of the day is doesn't make much sense, but from the I would environmental, let's call it this way, environmental point of view, it's a red flag. I don't know. Long term, I don't want that any NGO, any third party may say that we would be exporting water, which is not the case, but it's going to be problematic. Problematic. So I think that the best solution it would be hydrated. It's probably not the easiest, but it's the safest and the more reliable solution.
Okay. Okay. And I think just before we finish up on the Rio Grande project, I just want to highlight the resource optionality because obviously on the PEA, you've got a 20,000 ton per annum project with the potential to ramp up to 40,000 tons per year. But given the size of the resource, there is the potential to go higher on the project, isn't there?
Yeah, it is. We focus the project on the northeast. We believe that there is potential to go to produce even more than 40,000. But again, it was a PEA. We're gonna develop a little bit more on the pre-feasibility. There is potential, still potential to increase the resource once we start exploring on the northwest that we haven't explored yet. We haven't drilled in the south that we assume low porosity and low concentration, but we haven't drilled there yet. So we still got potential to increase the resource, and therefore, as you said, the potential to increase even another stage or increase two stages of 25 rather than 20. So it's something that we prefer in the PA to be as conservative as possible in order to be as realistic as possible.
So basically, what we're talking about is a really good starter project, but the potential to treble or potentially quadruple the size of that project going forward once you had cash flow.
Yeah, absolutely.
Okay. I think that's really important. And then the final thing, just in terms of the project that I wanted to highlight, and you touched on it a few times, and for me, you don't make a big enough fuss about it, is that you've actually got quite a lot of experience with building brine projects, have you not?
Yeah, I mean, I got 26 years in the engineering and construction business, and I, I managed project myself. I was involved in one of the largest uh, projects in the region, the Vascolama project. Um, I was project director of that project. I was involved in one of the lithium project. I was involved as Howard said in the intro, I was involved in the MinXR project. So I believe that I bring some of that experience into this company as well, in the operation from the operation point of view. Yeah, absolutely.
Okay, great. And I think the final thing is obviously Argentina being a little bit of a sticky destination for foreign investors over the last 10 to 15 years. Um, a very different uh, kettle of political fish if one can mix one's metaphors like that, this time around. And I think one of the key changes is obviously this RIGI regime, and what it means for investors and what it means for new projects. So can you just talk the listeners through the framework and what that means potentially for projects in terms of freezing freezing the conditions and the returns for investors?
I would say that the most important thing associated with the RIGI is the tax stability. That is the most important thing that is associated with the RIGI, besides the reduction of the income tax, reduction of the export duties, and many other advantages that are associated with this incentive that are very important and provides improvement to the project economics. But the fact that provides a tax stability, it opens the possibility for investors to say, okay, this is something that I would be able to invest for long term without changing the rules. So this is, to me, this is the most important aspect of this for new investors that were not exposed to Argentina in the past. As a matter of fact, now that you mentioned that, one of our plans for Rio Grande, besides the pre-feasibility that we are planning to analyze before the end of the year, now that the rig was extended, we are working also on the baseline for the permit. So during the early part of 2027, our idea is to submit the permit for the exploitation during the early part of 2027, and also take advantage of the extension of the RIGI and submit the RIGI, Rio Grande for RIGI. So we got the project with the pre-feasibility, with the RIGI, and certainly with the submission of permits. So it's going to be a project significantly de-risk going forward.
Okay. And just from my point of view as an analyst, just to sort of put some numbers on this. So the lower corporate tax rate, 25% versus 35%. So that's substantial. The reduced import duties for an extended period of time, that's substantial. Export flexibility, free access to foreign exchange. And then, as you say, the 30-year stability program. So, each of those is substantial. There's very substantial changes to the taxation and the royalty treatment, which impact the returns on the project. Won't get into the nitty-gritty of the model, but they are, very, very substantial and significant. And it does make a big difference to the economics of investment in Argentina compared to the situation we did have.
Absolutely, absolutely. But coming from the past, I agree 100%, Matt, that economics play a big part of the evaluation. But for a new investor, the key element is the tax stability, because at the end of the day, no one wants that a new new administration comes and change the rules tomorrow. So this part is key.
Yeah. Okay. That's the sort of bottom up point of the project. I just want to talk a little bit about the top down. When we go in and have a look at the takeout multiples that have been seen in Latin America, particularly in Argentina, for brine operations over the last 4 or 5 years, we're talking about an average EV per ton of about $100 per ton of contained resource. Yet NOA and similar brine projects at the moment are trading at something like a 50 to 70% discount to that. What do you think that the market is not picking up that the industry is about brine projects?
It's difficult to answer that, Matt, to be honest, but we are seeing that in Australia, in the ASX, the brine projects are much better valuated than in North America. Uh, um, so
Better, but not
better,
brilliantly.
not better valuated. So I would say that one of the aspects is where the company is listed. I think that one of the aspects is that. Second thing is that I believe that people tend to. I think it's easier to understand mining as traditional mining rather than brine that most people don't quite understand. So traditional mining is rock. I mean, at the end of the day, they believe that they produce something easy and they ship it. Period. That's it. Brine projects may take a little bit longer to produce something, and probably that's maybe a factor. But from the OPEX point of view or the return that the brine project may bring, it's no brainer. It's no sense.
I mean, head and shoulders on an integrated basis or a like for like basis, head and shoulders above what a hard rock project would produce. And it amazes me, when you do compare apples with apples, that the brine projects are trading at such a discount. Okay, let's talk a little bit about some of the other projects, because NOAA's not actually a one-trick pony. It's got actually three different projects. We've talked almost exclusively about the Rio Grande project, but you also are looking to develop two other projects. So let's start with the Arizaro project. That's a big sort of claim holding, something like 78,000 hectares that you've built up over many years. Can you talk a little bit about what else is going on in that salar and why you're excited about this project and what the potential is for it?
Yeah. I mean, in Arizaro, there are many players. It's a Eramet, Plus Petrol, Lithium Chile, which is currently undergoing a transaction with that potential is going to be approved shortly for 200 million US for the 100% of the project. So it's a large salar. It's the largest salar in Argentina, and it's a lower grade than Rio Grande, but porosity in the salar is probably much better than in other places. So may become a big volume or big resource with a low concentration. We, as you mentioned, we got a large land package, and our strategy there is to develop this project with a partner. We've been looking for a partner for the last few months. The market changed during the last few months, as you know. We got a few options that we are evaluating as we speak. We believe that there are opportunities now to start unlocking value in Arizaro. And we believe that there is an opportunity for that. And our intent is to have some news in Arizaro during 2026. Again, with the partner, our focus will remain in Rio Grande during this year. Potentially, and I'll move to the third project. Potentially, we wanted to start doing something in Salinas Grandes. That is a small in terms of size. We got 10,000 hectares there. but we believe that the potential is big there. Salinas Grandes is close to the city of Salta. Is connected through a paved road close to this city of this town of San Antonio de los Cobres. So from the logistical point of view, for its development, it's great. So we can support all the development of the project from San Antonio de los Cobres. So if the market continue as it is right now, and there is financing, our idea is to start drilling in Salinas Grandes during 2026 and have maiden resource shortly after that. Salinas Grandes, based on reports done by what used to be Orocobre in the past, LSC, it's a salar that may have a high concentration, potentially between 500 and 1,000, with a chemistry with low contaminants. So potentially maybe a very good project with a certain size. We don't know yet, but potentially with a very good brine. So this is our idea with the other two salars, that hopefully we can start unlocking value during 2026.
Okay. And then just remind me about what you intend to produce in terms of catalyst from Rio Grande over the rest of the rest of this year.
Yeah, our main milestone is going to be the pre-feasibility by before the end of the year. But as I mentioned, we just engaged Hatch for this DLE study that's going to take 2-3 months. We're going to start drilling in the next week or so. So we're going to start drilling pumping wells during May. We're gonna start the actual PFS by middle of this year. So we're gonna have exciting news in the next few weeks, and then after we're gonna start doing the hard work of the PFS. So and as I mentioned before, we are working on the baseline for the permitting that hopefully we can submit in the early part of 2027.
Okay, brilliant. Thanks very much indeed. Yeah, as Howard said, you can access my my research report on NOAA online on the RK Equity website.
Thanks, Matt, for that. And Gabriel, I'll just make one reference because it is, there's been M&A on the tape. We saw today Alevra selling their piece to YU Cobalt after Atlantic Lithium agreed to sell to YU Cobalt. That just reminded me that YU Cobalt actually put in a very low bid together with Renault of $150 million for Galan. And Galan rejected that bid, didn't even bring it to shareholders. It shows a bit of a difference between Africa risk and Argentina risk, and the valuations and the appreciation and ability for both China and West and non-China parties, to participate in here. Anyway, M&A is very much happening in the sector. YU Cobalt, is basically paying $300 million cash for the Atlantic asset. They were bidding, as I said, with Renault, $150 million, and that was, about a year ago when lithium prices were much lower. So there's definitely appetite in the market for spodumene, but there's also appetite, for lithium assets generally. And as we mentioned earlier, Lithium Argentina, which used to be Lithium Americas, which, Gabriel, you were affiliated with that asset. That asset is now in full production, and their costs are going down. Operating costs are going down, showing that Argentina, as we had a video last week with Mac Whale, who was talking about, the cost in Argentina could never be as low as, let's say Atacama, and they are showing that. So this message, we're just going to continue to beat the drum, Matt. Brines in Argentina are are great assets. Are great assets.
Very cheap. I mean,
they're trading
you
very
could go
cheap.
so far as to saying they're a value trap. They really are. I mean, you may not ever get another a better valuation for these Argentinian brines as you would at the moment.
Yeah, and under Millet, Argentine risk has never been better, than all the times I've been observing Argentina. So with that, let's hope the momentum of your 30%, stock appreciation on Friday, just like that's what happens with illiquid stories that no one's paying attention to. You suddenly wake up, someone hits the bid, and so the trading activity, like it's up a little bit today. There don't seem to be a lot of sellers, and when stock prices are rising on increased volume, and they're not very much, downside volume, as I'm not a technical analyst by any stretch, but those historically have been patterns that I found to be useful. So with that, we're biased. We're an advisor to the company invested in. This is all not investment advice. Do your own research, etc. But we do have a history here at RK Equity and Rockstock Channel of presenting high quality companies with good management teams to our viewers. So take that for what it's worth. Thanks very much, Gabriel, for this detailed update, and Matt.